Welcome to this week's Q&A. We've got a very relevant question this week, and it's from a viewer of ours in Hong Kong who's asked me, what are the impacts of the lockdowns going to be on the East Coast property markets in Australia, particularly Sydney and Melbourne, with the difference between 2020, the original ones, and this year, 2021. And it is a very good question because I've put down a few salient features here. The east coast of Australia obviously contains a majority of capital city and major regional markets in the country, but this gentleman was focusing on Sydney and Melbourne, but I'll expand a little further. And let's have a look at perhaps some of our own personal experiences that occurred last year at the beginning of the onset of the pandemic and the restrictions that were then imposed around the world, and how we all reacted to that, because it is pretty different, and it's different this year. So, one of the big things that we look at when you're looking at residential property is consumer confidence, because, people are making a pretty big decision, an important financial decision when they're deciding to buy a new home, whether it's upgrading or upsizing or downsizing or right-sizing, or buying an investment property or two. So it's very important in relation to how people act. And consumer confidence last year at the onset of the pandemic plummeted very steeply and very sharply and dropped, over 40%. But that lasted about 6 weeks. This year, in this year's lockdowns, consumer confidence has dropped around 12%, and so far it's lasted about 8 weeks. We'll continue to monitor that obviously as the lockdowns continue in New South Wales and Victoria and the ACT. But important to recognise the difference in that. And then, the other impact, I suppose, on property markets that we correctly predicted last year was this big decline in transactional activity, in sales volumes. And we'll go through some of the reasoning behind that. And that's what occurred last year. I said that property prices wouldn't be impacted that greatly, but obviously volumes would, and that's exactly what played out. So let's have a look at that. Last year transaction volumes dropped down over 40%. This year that hasn't occurred, but let's have a look at why that occurred. So if we look at the left-hand side there, or the right-hand side as you're looking at it, in 2020 we had these physical restrictions that came in and locked everyone down. And that obviously put paid to live auctions and many other things that we utilised to transact in the property market with. The biggest one, I think, was fear of the unknown and fear of the potentially known. There's massive loss of confidence, as I've said. Job security, people were worried about employment or unemployment, more importantly. And then the other thing that came in very quickly were bank lending restrictions, because they also had the same fear. They didn't know who they could lend to or how much, and didn't really have policy responses in place, because this was an unprecedented event. If we look at this year and the lockdowns, particularly in New South Wales, Victoria, the ACT, the physical restrictions have been largely overcome. So we have online auctions, we have online inspections. Some states still allow physical inspections. New South Wales, albeit with restrictions. Victoria doesn't at all. And that's had some influence in terms of the difference between one state and another. Consumer confidence has actually remained pretty high. ANZ's Royal Morgan Consumer Confidence report shows that the number remained above 100. So consumer confidence is still high, although we've seen some impacts the longer these lockdowns drag on. And jobs data, unemployment or employment, is also actually very strong. So if we look at the ANZ jobs data that's come through, the most recent numbers show us that job ads are still at least 25% higher than they were pre-pandemic. So, that's still a very strong boost to confidence, I suppose. And then the other thing is here, we've got the lowest interest rates we've ever seen. So the cost of servicing existing debt or contemplating new debt remains very, very accessible for most people. One of the things I guess we should think about is perhaps some of the macroprudential measures that may come into play at some time soon. Now, the other major thing is auction clearance rate, because that's another good measure of what's happening in property markets. And the auction clearance rates have varied a fair bit. So Sydney's remained pretty high. That's over the month of August, 76%. Melbourne, 59%, but it masks some underlying factors. In Melbourne, due to these lockdowns and no physical inspections, etc., about a third of properties have actually been withdrawn from the market. So that impacts the auction clearance rates. But the reality is, if you go beyond that, the actual volumes of sales in Melbourne have been higher than Sydney. So, just worth bearing in mind when we look at statistics, they can show various pictures. And I just thought I'd mention, because, certain states like Queensland, so in Brisbane, you haven't had any lockdowns. Canberra's had a much smaller lockdown than the other states. Canberra's been a very robust market, strong auction clearance rates. So has Brisbane. So, plenty of other things to talk about. Regional markets as well. The Gold Coast, the Sunshine Coast, Newcastle, Wollongong, Geelong, lots of other things, but I can't cover everything obviously in today's session, but I want to give people some, I guess, perspective to how to look at these things. I really look forward to next week's questions, and I'm sure we'll be able to find some more interesting things. So see you next week. Please, if you like this, subscribe to our YouTube channel and like what you see. I'm Andrew Unterweger from Wise Guru. See you next week.